What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at advanced micro devices, ticker symbol AMD, on a variety of time frames in anticipation of tomorrow's trading day, Wednesday, January 31st. Well, AMD today, of course, reported earnings. We got an EPS of 77 cents. That was versus the expectation we met of 77 cents. Revenue, we posted $6.17 billion. That was compared to the $6.12 billion expected. Now, the majority of movement here in earnings, at least as of late especially, and especially on tech earnings as well, is going to come from forward guidance. So we got Q1 2024 guidance. This report, of course, was from Q4 2023. The guidance is really important, though. And AMD said they expect about $5.4 billion in sales in Q1, plus or minus $300 million. So worst case scenario, that could put us at $5.1 billion. And the analyst expectation for Q1 guidance was 5.73. So the market's taken that, not really all that excited about that here today. But this video is much more about looking at the psychology of the charts and what we could look to potentially expect here in the very near future. So here is the 1 minute chart. I think it's worth taking a look at, but let's move on here to the 5 minute chart and then take a look at volume. Now, really quick, something I want to make sure we point out here. Understand that volume, of course, in the after hours, even, we had earnings, but compared to just middle of the day today, volume is substantially lower in the after hours, contributing to this move. So, with an earnings move, if it's on extremely high volume, which we do sometimes see, I think it's worth taking with more legitimacy. With an earnings move like this, where the volume's a little bit lower, I would prefer to see where the price ends up being held when bigger volume rolls in, like off of tomorrow's open. I think that's going to tell a much more interesting story and give us a much better sample size of where the market, as of right now, after this report, with the biggest sample size possible, meaning like the highest volume, like off the open, really thinks that this stock belongs. As of right now, again, the volume is not tiny by any means in the after hours. Of course, it is an earnings report. But like I always say, with any lower volume or after hours move, have to take it with a grain of salt here. Okay, I thought that was worth mentioning. Let's take a look here at the 30-minute chart now. Immediately what stands out to me, look, you have this 50-period moving average crossing over the 200 period, and that 50 period today, well, actually both of these in the last couple of days, we see this forming kind of a channel. This morning especially, the 200 period and the 50 period here on the 30-minute formed a channel. Now remember that I'm always looking at this as one factor of a variety of time frames that I'm paying attention to, because as traders, we're always looking for as many things to line up as possible on as many different time frames as possible that support our thesis. But in order to accomplish that, we need to know what we're looking at. So these two formed a channel, but the 50 period was acting as a resistance. The 200 period was acting as a support level really the last couple of days. These have now kind of come together. So look, while I understand that where the stock currently is to there is about an 8 to 9% move, we've seen AMD be volatile in the very recent past. So, I mean, listen, if we end up seeing an upside retest, 8% is not incredibly out of the question. So I am paying attention, at least mostly, what I'm paying attention to the most on the 30-minute chart in particular, is this area up around 174, 175, if we end up seeing a retest of that. But of course, if you are bearish, you're obviously looking for continued downside from here once we get more volume in. Let's take a look at the 4-hour chart, get a little bit more context. You can see here that this move puts us down right kind of smack dab in the middle of this channel between the 200 and the 50 on the 4-hour. That 150 area, that's a psychological level that has now turned into obviously a technical level looking back here at the semi-recent past. So 3 things that I'm primarily paying attention to on the 4-hour, and remember, always one factor in addition to multiple time frames, right? The 50 period up here sitting currently just above 170, right around 171. The 200 period down here currently sitting right around 146, and then 150 is an obvious level. Anywhere in between there on the 4-hour chart here, I think is going to be You could argue that 160 for a couple of days, really 3 days in a row, we saw acting as turning a semi-weak psychological level, because like 160 is not nearly as psychological as 150. I think that makes a lot of sense to most traders, but it kind of turned into a technical level over the course of like 3 or so days. So I might look at 160, but really aside from there, once we get a breakdown or a bounce, I'm looking up here at 170, 171, down here to 150, down to that 200 period at 146. Aside from that, it's not uncommon to see quick moves in between levels within channels if it's on a popular time frame. Just psychologically speaking, it naturally tends to occur that way often. So let's zoom out here to the kind of granddaddy, the most important chart from a day-to-day perspective, and what is typically the strongest psychological chart because it has the most eyeballs, okay? So remember, this is the daily chart, so it's not going to reflect the after hours movement quite yet, but the stock in the after hours is down here more so, closer to 161, 160. So looking at this, it becomes even more clear that I think right now, aside from looking at 160 as a potential level, we're kind of in between a couple of really big regions. You have 150 down here, 160 as again, kind of a shorter term technical level. You have the 50-day, which is the nearest highly popular technical indicator on the daily chart that like everyone's going to be looking at. That's down at 142, so not immediately relevant. And then, of course, you have the all-time high of 184.92. So listen, I would not be surprised to see some volatility here in the next couple of days or the next week or so as the stock kind of fumbles around, unless we stick to 160 like glue. If the stock starts fumbling around, I think it's likely to see some volatility in either direction, trying to get to that next highly relevant psychological level. Now, listen, if you are bullish, considering the stock is right around 160, ideally you wouldn't want to see a downside test of 150, but understand that is a powerful psychological level that could act as a potential safety net or psychological and technical level of support if we do see a test. But ideally, if you are bullish here in the near term, you'd want to see a rip up out of the hole away from 160, treating that as a support level. If you're bearish here in the next day or two, a downside break of 160, listen, psychologically, a lot of bears, given that case, might be looking for a downside test of 150. A downside break of 150, they're looking at the 50-day moving average down around 142 as of right now. But again, here, if you're bullish, you want that bounce off 160, and that opens up kind of open sky all the way up toward that all-time high, which is like a 15% open sky move with not a whole heck of a lot of hang-up, except for potentially, looking here right above 170 on the 4-hour chart, really. And then in addition to that, maybe up here on the 30-minute, right around 174, 175, but nothing near as strong as that 160 and then that all-time high. Okay, implied volatility here. Listen, if we zoom in a bit and actually take a look, you can see here that it is elevated, which makes a lot of sense heading into earnings, but you can see we are likely, it would not be surprising at all to me to see this fade off after earnings, like tomorrow, right? But understand also that we do have FOMC tomorrow, so that could contribute to more upside in IV. If you bought options, whether you bought calls or puts, you want to see IV go up. Okay, it doesn't matter if you're right directionally. As long as IV goes up, it could help you make more money than you expect, okay? Or help soften the blow. Okay, of course it matters if you're right directionally. But even if you bought calls or you bought puts, the key word is you bought them. So IV going up benefits you as someone who bought the options, because it's hurting the people who sold the options if they're currently short the options as a position, right? Not like sold them to close, but sold them to open that position. No matter if you buy calls or puts, IV pump is a good thing. And no matter if you're selling calls or puts, IV dumping off, or commonly referred to as IV crush, is going to benefit you. Okay, let's finish out here by taking a look at the options chain. Over 1 million contracts traded today, 620,000 calls, 448,000 puts. Just understand that all this data was from before the earnings came out. So I think it's just interesting to look at, although tomorrow it's going to be even more important to look at this, how the traders react to earnings. But interestingly, I went over this on the Roensch Capital show today. Look at the delta between 0 and 20. Those are those short-term speculators, the cheapy, out-of-the-money, highly leveraged short-term speculation contracts. 234,000 calls, 232,000 puts. Very much so undecided from a short-term speculation standpoint heading into earnings today, but overall call put ratio leaning slightly to the bullish side. Listen, for future updates, hope to see you subscribe to the channel. Thanks, it helps out tremendously. I appreciate it, and I'll see you in the next one.